So two simple rules all traders must follow, and why institutional traders don't want you to know these rules. Just going to go through this week the risk disclaimer that any type of trading really is risky, not appropriate for somebody with limited capital, and you've got to be careful. You're all big boys and girls out there, and this is a risky undertaking. So a little bit about me first. It's important need to know where I came from, really. So I joined the army in 1986, which seems a long time ago right now. That's me with the yellow there, look, wet, cold, miserable, and trying to earn a bit of extra cash, driving a taxi. That was the actual type of car that I drove as a taxi back in the day. Has anyone else here start their career worked multiple jobs to try and get a better life? Type yes in the chat box if you've done that. We're never happy, especially when we're young, with that first job and all the extras that we want to get. So we always try and do that second job or third job just to survive, just to get to where we want to go. So it did turn out that my army salary and part-time taxi driver was not getting me the life I wanted, really. The house in the sun, playing golf, traveling in style, all that sort of thing. So I decided to make a change. Okay, so a little later on in my army career, I was away for a 6 months training, away from my family. They lived in Germany at the time, and I just got told I'm going to be sent to Canada. So this is me there, and yes, I did have hair. So literally, we got to Germany. I got sent on a course for 6 months away from my family, and then all of a sudden going to Canada. And that sort of was the cycle of my army career, was always being away. And I thought there's got to be a better way of actually getting on with your life. So swiveled in my chair, turned on my computer, waited for 15 minutes for it to warm up. One of these old Pentium Packard Bell 386s. I found that on the picture on the internet, very close to what I had. Attached the dial-up internet. Remember that? And started researching. I think it was Ask Jeeves at the time as well. I don't know whatever happened to that. And I discovered that people were successfully losing money on the first online forex brokers. And that was about 96, 97. And I thought I could do that. Actually, I wanted to make money doing it, but it sort of attracted me to do that. I don't know whether you can hear this. Don't know whether anybody, let me know in the chat, can remember that dial-up technology. It was very slow, and where we've come today is absolutely phenomenal. Very slow. So, but that's what it was like. Pentium 386, 486, dial-up internet. Yes, Damien, you are too young for that. But those days were tough. So time goes on. And as you can imagine, my dad was very proud of me for rising through the ranks of the army, getting a degree in engineering and mathematics, and becoming an engineering manager. He was very proud. Then in 2002, I told him I was leaving the army to make money on this thing called the internet. I think you can imagine his reaction. He was very old school. So friends thought I was crazy, make money online, what snake oil you've been drinking. Has anyone else had that friends or family doubt them when you want to change something, especially if it's trading? You've always got those doubters. They think you're crazy, even if they have your best interests and best interests at heart. So yes, Martin, yeah, people think you're crazy. You can make a living from trading, but everybody that are in your inner circle, if you like, really, really struggle to see how you're going to do it. Anyway, a little bit more about me. I was retired from the army, started to do that thing. My oldest son on the right joined the army and followed in my footsteps, and that's my youngest son at that time. And then time goes on, and that little boy did the same thing. Okay, so they followed in my footsteps through the military. Are they going to follow in my footsteps for trading? Probably not. It's just one of those things. So there were some other things that got in the way back then, and we just discussed that with the dial-up internet, the slowness, and sometimes you find yourself in a great position and then your internet would go down. And by the time you got back in, you've lost a bunch of cash. It was really, really tough in those days. I got quite good at it. I'm actually freaking really good. And time went on. Obviously, I left the army. I took on my first £1 million client. And after a few years, I'd made enough to live off the rest of my life because I was naturally good at that. You know, got my house in Spain. That's the view from my top of my house with the pool, the hot tub. I built myself a bar down the bottom there with a golf simulator. Traveled the world. Love to go to see the Formula One with my wife. And now we've got a house in Dubai. I'm living in Dubai a lot of the time of the year. So, you know, it was hard work, but I've got to where I've got to. But a lot of people will say, well, why was you good at this? It turns out there's something the army taught me. Be a robot, follow rules, don't make emotional decisions. That had been trained in me for over a decade, 15 years, in fact. And now that same skill set was helping me be successful in trading. So being emotional is probably one of the biggest killers of traders. It causes people to get into the wrong trades, to get out too soon or too late. As humans, we panic. So we like to think we're totally rational and totally in control, but we just aren't. We don't make logical decisions we think that we do. So how can we get my level of emotionless decision making when it comes to trading without going through 2 decades in the army? So what are the rules you need to follow, and how can we remove ourselves as much as possible so we don't get in our way of success? Okay, so follow the rules, don't make emotional decisions. The biggest mistake retail traders make, they look for reasons to get in the trade or start adding lots and lots of things to their charts to find a reason to get in a trade. Institutional traders look for reasons not to get in a trade. So this is their advantage, okay? They will be very selective, they'll be very rules-based, and they won't have emotions. So how many of you feel that institutional traders have an advantage anyway? Come on, let me know in the chat. It just feels like they've got this superpower or that they have this advantage. Absolutely, Tara. And it sometimes that frustrates traders more, retail traders more than anything. So how would you like to know what those unfair advantages are? Well, a couple anyway. You can't do it all in one night. So, okay, Martin, let's have a look. Simple set of rules. So each trading strategy institutional trading uses has its own rules, signals, entry management, things like that. But for any strategy, there's 2 main rules. They all follow. Remember, I was one for a few years anyway. The first one, frame your charts. I must have mentioned this so many times over the last 8 years. Framing your charts is extremely important. And then fresh air, okay? So frame your charts. How to know exactly when institutional traders are making decisions is extremely important. what we're going to do from now on, I'm going to refer to institutional traders as they. Okay. For one, it's easier to say. And two, they are the enemy. They wipe out your stops and make money from retail traders. It's not fair, but it's reality. And I'm going to show you a very cool example very soon. So you need to know when to buy and sell. Let's go through an example around CPI data on a futures contract. This is very important to understand. So the initial candle after data, okay, is this candle here. So it rises and it comes back up and just basically closes just above that open, okay? What most retail traders will do is then put a buy order just above this rejection pivot. Hands up, tell me in the chat, does that seem a sensible entry strategy to you as a retail trader with the knowledge you have right there? CPI's come out, it's reacted, it's come down, now you've got a sensible entry to go along. Does that make sense, everybody? Absolutely. Okay. Now, this is what continues a little further. So we get this little spinning top doji here as well. So you may have got taken into that trade and you may have not panicked right now, but some of those so-called educational people in trading, and I'm not an educator, I'm a trader, and my software has been made from my strategies, okay? So what they will see is after this spinning top, that's the time to get in above that spinning top. Is that a sensible strategy? You've probably been taught that as well. Okay. So let's take a step back and frame the chart like they do before a data event. After all, they get paid the big bucks. Sensible entries. Okay. Everything you've been taught as a retail trader, that's where you would go to be safe. So let's start by building a picture of that same chart. We've zoomed out a little bit right now. So this is the 5-minute time frame, and we've put some, some support zones on there. Down here, we've got lots of tests on here on the 5-minute. Here, we've got tests from underneath. We've got some clustering here, and we've got some tests here. And these are some new zones as well coming into the data, so they make sense. Okay. Now adding the 15-minute zones, we can see some really strong support forming down here, okay? So this one's probably not in play right now. You would put it on your chart, but they now look up to the 15-minute time frame, even though we're trading the day trading off the 5-minute. This is copper. 15-minute. The 30-minute zone is added now in green, starting to give really strong confirmation of support on this zone of price, okay? It's not an exact price, it's a zone of price. So what it's doing is you've got that confluence of 3 different timeframe support, and that's really, really strong. And then we've added the daily zones, so that gives us some resistance up above. They do this manually on decisions they and other institutional traders have made on multiple timeframes and keep them active. So if they're not respected over X number of bars, over X number of percentages, they will just ignore them. Okay. Sorry, George. Probably a little bit too far away from the mic. Okay, so we're going to walk through that same scenario now, where they use these zones to place buy and sell orders before the data even comes out. So they don't react; they plan with rules. Okay, let's go through this. So there's those same points that we discussed before. We've got that CPI data comes out, it goes up, retail traders would probably put buy order there. Already discussed that. So before even data comes out, institutional traders will put a buy order at the top end of this zone, okay? Remember, 5, 15, 30 minute, really strong support. They are not interested what the data is. They have a plan in place with their support and resistance zones to buy and sell. So we get this move up. Some retail traders with very little experience will try and ride that. Then it comes all the way back down, and all of the institutional orders get taken in. How do I know that happened? Or I know it happens because I used to do it. Because this rejection is massive. So there was loads of orders there, loads, okay? That much, it rejected those lows and went all the way and closed at the highs, okay? So they're in, they're good, yeah? Now, we get this next candle which goes up, okay? We get the retail traders going, and at some stage, what the institutional traders do, because they've probably put 10 contracts on, is take a couple of contracts off. That's why we get that move down. Then it consolidates, continues to go up. Look where those so-called educators told you to get in. They're not aware there's a big daily zone there. And before the data came out, those institutional traders just inside that zone put sell orders. Okay, so all those people that have gone long here and here, guess what? Boom, you're gone. Sell orders come in. Institutional traders take all their profit, and they've probably doubled down. So if they've gone long on 10 contracts, okay, their sell orders will be, if they've got 10 contracts still outstanding, there'll be 15, okay, so there'll be 5 going down. Look what happens. It comes back down to test that same zone. Guess what? They've probably got 3 contracts, buy orders on that point. They take the profit on the sell and they go long again. Does that all make sense now? Okay. Retail traders don't have this information because it's very difficult for them to understand those decision points that institutional traders make because they don't have the technology available to do it. Okay, fresh air. This is important. No matter what strategy you're trading, is you need fresh air. We're going to talk about that now. So that's one scenario. That's around data. That's understanding where those decision points are on multiple timeframes and actually putting those orders on before those come out. So the next thing is fresh air. That's the second rule. So some retail traders would use trading indicators to day trade oil, for example. This is an example here. And may even have a support zone on there. They may have looked left, like I say to people, and they've got a nice support zone in there, okay? And they'll do that on the 5-minute chart, okay? The 5-minute time frame. By the way, this is our VWAP Predator, okay? And when they look at these trades, they'll look for fresh air and they will look to take those trades. Now, they would have multiple time frame zones on their chart. So this is adding the 15-minute, okay? So now all of a sudden, those buy orders here that looked like they had a lot of fresh air actually don't. They're actually going long into that resistance, okay? Retail traders, I would say 85 to 90% of them would not have those 15-minute zones on there, okay? They would get wiped out at this point here. This one's a good one. You get, that's the stop, that's the entry, risk reward is over 1 to 2. Lots of fresh air, take the trade. This one here, 1 to 1, you see it struggled a little bit here. Probably a lot of retailers would have panicked and got out there. It did eventually get up. This one, retail traders would have thought, lots of fresh air, it's already going now, I'll go long. Goes into that 15-minute resistance, comes back down again. Sell order here is 1 to 1.5 3 or something like that. That's a pretty decent one for me, though. I always like 1 to 1.6. That's the thing. Now we have the 30-minute zone. This short, you see here, is less than 1 to 1. So now they've framed that chart and we'll have reasons not to trade. No fresh air, no trade. Repeat after me. It doesn't matter if anybody's in the room. No fresh air, no trade. That is important. Even type it in the chat there. You should have it written on your wall. No fresh air, no trade. So these two are good. This one, no good. This one, when you got 30-minute on, no good. Okay, this is why you see it turn back up again. So now we're going to build a picture with the VWAP on NQ this time. So let's go through one more example where they filter out poor trades with these same rules. So this time on NQ, but again with our VWAP predator. So most retail traders will follow signals blindly. You may not want to admit this, okay? But is anyone brave enough to admit this in the chat, okay? Do you sometimes follow signals blindly without framing your charts? Come on, who's brave enough? No one's brave. Oh, here we go. Here we go. Yes. Okay, right. So let's build a picture. So we're on the 5-minute time frame. We've looked left, and there's a 5-minute support zone here, and that looks pretty good. So we now at the 15-minute time frame. All of a sudden, these buy signals here, we wouldn't take them. But you know, we've discounted those. These sell signals are still good. We take those, they're good. They come down to take our support. There's a confluence of 5 and 15-minute support here. This buy signal here, the top of the candles right there. There's no fresh air. We don't take the trade. So this trade is discounted. Okay. Now at this point, with just the 15-minute on, this buy signal looks pretty good there. The sell signal is, you know, it's close. It's about 1 to 1, so it's not brilliant. The buy signal here looks pretty good. And at this stage, this buy signal looks good with just those two on. We add the 30-minute zone now. Remember, all of a sudden, this buy signal, this would have been rejected by them, they, because there's no fresh air. Okay, so now we've had those 30-minute time zones. That third trade has gone, no fresh air, no trade. Now adding the 60-minute zone, you can see where that sell order now, there's no fresh air here. We've only got 2 trades, okay? Because there's lots of fresh air on the sell, there's lots of fresh air on the buy. So what I'm going to do is I'm going to take you through this second trade because it's you know, with the VWAP predator, for example, you're going to look to get in those early moves with fresh air. You're not going to take this buy signal here because you're in a 60 and a 30-minute zone. You're not going to take this buy signal because there's a 30-minute zone just up there. You're not going to take those, okay? You've got to be ready and you've got to take those ones with fresh air. So we're going to actually go through because this trade here comes all the way up, okay? I'm going to go through how to manage that trade. So the VWAP predator has a ribbon built in for trade management. Again, it's logic that they use runs through all of our trading software. So this ribbon actually is logic that institutional traders use. Because I was one, that logic's been put into the software. Simple as that. Okay. Now, we can see that original buy signal here. We take the long. We see how the ribbon remains green, even on this little pullback here. It pushes into the resistance zone here, 60 and 30 minutes. It could turn around. So if your entry was just along above the buy, your trading stop is just below this pivot here. You're locking in profit. There's no risk. So you let it run. the green ribbon remains all the way through as it really tries to push through that resistance. Eventually, it turns red slightly here. That's when you take your profits, okay? So it's just as important to find reasons not to get in a trade. Remember, no fresh air, no trade. Yes, no fresh air, no trade. So who would like to have institutional-led decision zones? Who would like an unfair advantage to other retail traders? Okay. Who's fed up with missing great trading opportunities and who wants a head start? So this means you'll have an unfair advantage, being able to spot the right times to trade along with the big boys, but more importantly, when not to trade. So multi-time frame zones on one chart. See the bigger picture straight away, which allows you to make quick trading decisions, ensuring you don't miss the boat on great trading opportunities. Totally automated support and resistance zones. So it adds and removes zones live to keep up to date with those institutional decision making, because zones will only last so long, because there'll be a point in which data comes out and blows through that zone, and that zone is not respected anymore. Then institutional traders will move on, because price will move on, and that a lot of that is a reaction to data that upsets the apple cart, and you've got to start resetting. This does it automatically, so it gives you a head start on the majority of retail traders. Okay, now special offer for attendees. Okay, this is only going to be for the week. So founders rate $50 a month. We're doing this founders rate, $50 a month, and you can trial it for just $1 for the first month, okay? So scan this QR code. It's on your computer, get your phone, scan the QR code. The link, cooltools.globaltradingsoftware.com. If Damien could put that in the chat there as well, that would be great. So I will only be offering the first $1 trial to the first 250 users. So get in while you can, because tomorrow I'm doing another one of these for a lot larger audience. I will be offering the founders rate, the $50 a month for the first 500 people. After that, the subscription will be increasing. It will be doubling, and that will be it. Go and do that now, okay? Please do that now. Oh, by the way, there's a couple of customer testimonials here. Pedro, some of you on the Discord group will know that Pedro's very active in the Discord group. And this is on Trustpilot. And then Tom from California as well. Again, he says here, look, patience, discipline, and your ability to read the charts are not included, okay? Because the best will in the world, we can't get everything right for you, but these guardian zones, these automated support resistance zones that look at institutional decision points, we can put them on the chart for you now. We can only do it for an each trader, and that's and I could apologize for that, but the logic is so complex, we can't program it or convert it to any other platform. That's just the simple fact. Okay, so remember, founders rate $50 a month. Once we get to that 500, that's it, it's doubling, because the cost is going to be more to manage it. And right now, scan that QR code, you get the first month for $1 trial. Okay, go to cooltools.tradingsoftware.com and that's the same link. Okay. Yes, the Guardian Zones. Absolutely. It's called the Expert Guardian Zones, and they're there to keep you out of trouble. In theory, you've got to follow the rules. Okay, so that's it. Thank you very much.